2 years after Lehman's went under, nearly sinking the global banking industry, it seems the sector is making a tentative recovery. Stress tests in the EU and US show that banks are, on the whole, healthy. But as concerns over European sovereign debt and some heavily leveraged balance sheets still ripple through financial circles, there may yet be more stormy waters ahead.
Banks need to significantly boost the deposits that they take from the customer base, and probably will have to downsize their loan portfolios. And while that's at odds with the government's desire to see the banks lending more to mortgages and more to small business, the reality is the UK economy is heavily indebted through the banking sector, and by rebalancing their businesses, the banks will necessarily have to reduce the amount of loans relative to the deposits they take in.
Banks have spent the last decade pulling out of the high street to reduce costs and trying to push customers onto the internet. But now, as credit dries up, many retail banks are turning their attention back to the branches. This may not be a cheap option, but it does at least help reduce unemployment.
After the turbulence of the financial crisis, retail banks are realising that it's not about making easy money anymore. Re-evaluating their relationship with their customers, many banks are once more stepping up the hiring of frontline staff. Spanish group Santander are launching a recruitment drive that could see an additional 6,000 staff brought on board. Royal Bank of Scotland and Lloyds are also selectively recruiting in retail banking. Whilst newcomer to the market, Metro Bank opened their second London location recently, looking to take on an additional 60 staff over the next few months.
Metro Bank is the first new high street bank to be granted a licence in the UK for more than 100 years and seems to take customer service seriously. With the kind of accessibility we've come to expect from shopping for groceries or clothing, punters have flooded through the doors at such a rate. This location in Holborn hit its 12-month target for new accounts in 4 weeks.
I think people have resorted more to bricks and mortar. They like to know where their money is going to be. I think they're becoming a little bit more savvy about the financial services compensation scheme. Even some of them are beginning to understand what bank capitalisation actually means. We're the first bank to have been authorised under the Financial Services Authority's new, much more stringent rules around capital and liquidity. We meet all of the Basel III requirements many times over. Other banks are given up to 8 years to do that. So I think people are starting to understand that they want a bank that has good financial strength.
Feels nice.
Whilst other banks seem to be heading in the same direction, in other words, back to the high street, they have their work cut out for them. Post-crisis, many banks are having to deleverage their balance sheet, which ultimately means cutting costs and inevitably cutting service.
The other banks believe that it's a no-growth industry, that it's a mature market, and that the only way they can make money is to reduce costs. We think there's a fantastic growth opportunity here. We think we can grow a 200-store, 25 billion asset bank in a decade by over-investing in the customer experience, and that's what we're going to do.
But such expense could be considered a valuable loss leader. Going back to basics with branches allows staff to sell more profitable products directly to the consumer.
They finally figured out that actually there are certain very high value added products that can only really be sold through the branch network, and that turning away customers from prime high street locations is not a very sensible retail strategy.
But not all personal service needs to be carried out in person. What matters is that customers feel the service is tailored to them. Banking by text on your own phone is both personal and extremely handy. Juniper Research believes we'll see a huge shift towards mobile banking in the next 3 years, with 1 in 6 people in developed countries using some form of mobile banking. The number of SMS messages sent reaching a staggering 90 billion worldwide by 2015.
At the end of the day, it's all about improving customer choice, improving convenience, ease of use, and developing that personal relationship with customers. And mobile banking has a critical role to play in that in the future.
And of course, one of the most attractive prospects going forward for banks, 80% of which already offer mobile services, is the untapped potential of the booming emerging markets. In remote parts of Africa, India and Asia, where a trip to the branch is a real challenge, the billions of potential mobile banking customers represents a real opportunity.